Curious about how to seamlessly invest in real estate without the hassle of buying and managing properties? Welcome back to our Beginners Real Estate series. Last time, we explored the world of residential real estate and how to get started with owning rental homes. Today, we're taking the next step in our real estate start journey by diving into real estate investment trusts, or REITs. With our step-by-step guide, we'll make property investment accessible to everyone. Trust me, whether you're a seasoned investor or a beginner's real estate enthusiast, you won't want to miss this. In our previous video, we covered the basics of residential real estate and discovered how easy it is to get started with owning rental homes. If you missed it, be sure to check it out on our channel for a comprehensive guide on residential property investment. Now, let's move on to another exciting way to invest in real estate. REITs. Real estate investing doesn't always mean buying physical properties. Real estate investment trusts, or REITs, offer a way to invest in real estate without the need to purchase, manage, or finance properties directly. REITs have a fascinating history and have become a significant part of the real estate landscape. The concept of REITs was introduced in the United States in 1960, when President Dwight D. Eisenhower signed the Real Estate Investment Trust Act into law. The idea was to give all investors, especially smaller ones, the opportunity to invest in large-scale, income-producing real estate. Initially, REITs were slow to gain traction, but over the decades, they evolved significantly. In the 1970s and 1980s, the industry faced challenges, including economic recessions and changes in tax laws. However, the 1990s marked a turning point with the introduction of modern REITs, including publicly traded REITs. These developments, along with favorable legislation, helped REITs gain popularity. By the early 2000s, REITs had become mainstream, providing investors with a liquid and diversified way to invest in real estate. Today, REITs are a vital part of many investment portfolios, offering a way to invest in various sectors of real estate, from residential and commercial properties to specialized areas like healthcare and data centers. They provide regular income through dividends and have proven to be resilient even in challenging economic times. Now that we've uncovered the intriguing history and journey of REITs to mainstream acceptance, you might be wondering how you can get in on this exciting investment opportunity. Stay tuned, because up next, we'll dive into the actionable steps you can take to start investing in REITs and unlock their full potential. Trust me, you won't want to miss this part. REITs, how to. Investing in real estate investment trusts, REITs, is a fantastic way to gain exposure to the real estate market without the need to buy, manage, or finance physical properties directly. Here's how you can get started. First, it's essential to understand the different types of REITs. They come in various forms, and knowing the differences is crucial. The two main types are equity REITs and mortgage REITs. Equity REITs own and operate income-producing real estate, while mortgage REITs provide financing for income-producing real estate by purchasing or originating mortgages and mortgage-backed securities. There are also publicly traded REITs, which you can buy on major stock exchanges, and private REITs, which are not publicly traded and typically available only to accredited investors. Next, you need to research and select REITs that align with your investment goals. Consider the types of properties they invest in, their geographic focus, and their historical performance. Websites like NAREIT and various financial news platforms can provide valuable insights and performance data. It's like looking at a menu and deciding which dish suits your taste. Think about whether you prefer residential, commercial, industrial, or specialized sectors like healthcare and data centers. Before diving in, it's crucial to evaluate key financial metrics. You want to understand the financial health of the REITs you're interested in. Look at metrics such as funds from operations, FFO, which measures a REIT's cash flow from operations, and the dividend yield, indicating the income you can expect relative to the REIT's share price. Other important metrics include the debt-to-equity ratio, the occupancy rates of the properties within the REIT's portfolio, and the growth potential of the properties they own. Then, to invest in publicly traded REITs, you'll need a brokerage account. Choose a reputable brokerage that offers a wide range of REITs and has low fees. Many online brokerages provide user-friendly platforms ideal for beginners. Some popular options include Vanguard, Fidelity, and Charles Schwab. Setting up an account is straightforward, and you can often start with a minimal investment. Diversification is crucial. Just like with any investment, you don't want to put all your eggs in one basket. Consider investing in multiple REITs across different sectors to spread risk. This approach can help protect your investment from market volatility affecting a particular type of real estate. Imagine having a mix of residential, commercial, and industrial REITs to create a balanced portfolio. Finally, once you've invested in REITs, it's important to keep an eye on your investments. Monitor the REIT's performance, market conditions, and any news related to the real estate sectors in which you're invested. Staying informed will help you make better investment decisions and adjust your portfolio as needed. Reevaluate your REIT holdings periodically to ensure they still align with your investment goals. Now that you have a clear understanding of the actionable steps to start investing in REITs, you might be wondering how effective these strategies are in real life. Let's dive into some inspiring success stories that showcase the potential of REITs in building wealth and generating a steady income. Success stories. Consider the case of Sam Zell, a legendary real estate investor who founded Equity Group Investments and played a pivotal role in popularizing REITs. His innovative approach and investment strategies have made him one of the wealthiest real estate investors in the world. Zell's success demonstrates how understanding and leveraging REITs can lead to significant financial gains. Another inspiring story is that of John Gray, the President and Chief Operating Officer of Blackstone Group. Under his leadership, Blackstone has become one of the largest owners of real estate in the world, heavily utilizing REITs in its investment strategy. Gray's achievements highlight the power of REITs in building a robust and diversified real estate portfolio. Stay tuned for our next video, where we'll dive into another exciting type of real estate investment that could be the perfect real estate start for your portfolio. We'll break down complex topics into simple, actionable steps with our step-by-step guide, ensuring you have all the tools you need to succeed. Reflect on the possibilities that REITs can offer you. Whether you're looking for steady dividend income or a way to diversify your investments, REITs provide a great opportunity. By following these steps and learning from the pros, you can begin your journey into property investment with confidence. Remember, patience, research, and persistence are key. So, start researching and take your first steps into REIT-investing. We'd love to hear from you. What type of REITs are you most interested in? Let us know in the comments. Whether you're a seasoned investor or a beginner's real estate enthusiast, thank you for watching and see you in the next video.